Is there a way to anticipate if and when the 20-period moving average is going to start trending? I will answer this in two ways. Number one, yes. Number two, you don't need to anticipate anything. You don't need to know anything in advance to be a proper, professional, profitable trader. This is a misnomer, guys. This is this misconception that you need to become a good predictor of what hasn't happened yet to be a good trader. But a good trader is just a reader of what is right now. When they look at a stock, they say, what is the state of the 20-period moving average now? And if the state is rising, they're going to look for an entry near the rising 20. They don't need to predict what the next state of the 20-period moving average is to play that. It is not necessary to be a predictor of the future. It is necessary to be an accurate reader of the now. Do you understand? I open the curtains and I look outside and I see right now that it is raining. That's all I need to bring my umbrella. I don't have to predict that. That is, in essence, what a successful trader does. They don't read into anything. They read what it is. And if you're a good reader of what is the current state of the market now? What's the current state of the 20-period moving average now? Is the stock in a narrow state now? Is the stock in a wide state now? Is the 20-period moving average rising now? Is the stock at or near rising 20-period moving average now? Is the color change off of the 20-period moving average occurring now? There's no prediction in that. With all of that being said, I will tell you that there are times when you can know that the next stage or the next thing for your 20-period moving average is trending. But what you can't know direction, but you can know that a trend is next. Basically, if we just use the 20-period moving average, the way you do that, wait for your stock to basically be in a narrow state. And a narrow state is largely when your 20-period moving average lays down for a nap. I mean, that's in essence what a narrow state is. Your stock is flat and the 20-period moving average, it was active here. And now look at your 20-period moving average take a nap. It lays on its back to take a nap. Now, that narrow state where your stock and your 20 almost become one. Do you see that point there? Where the 20 and the stock almost becomes one. They are one and the same. That's the narrowest state of all. And from this narrow state, you will either boom, explode out to the upside, or boom, explode down to the downside. There is nothing next except an explosion after the two become one. So markets are constantly vacillating between narrow state, wide state, back to narrow state. But sometimes narrow state, wide state, back to narrow state. And repeat, narrow state, wide state up, or wide state down, back to narrow state. You see? And your best opportunities are going to come from the narrow state, the move out of the narrow state. And my advanced traders know that when you get to wide state, that's when you can counter trend your market. But most traders have to be developed as narrow state traders first and counter trend traders second. That when I try to train a trader to do both at the same time, they trip up. But first, we focus on them being a narrow state trader. And so if you look at this stock, if you look at Apple, and this is yesterday's activity coming into the morning, here is your most narrow state right there, where your stock in the 200 is almost one. And boom, we come out of that narrow state into this explosion upward into this morning, late yesterday, and it continues this morning. The broad things that contribute the most to a trader's failure? There are several things. Things like not limiting your loss to 1 bar on most trades. That right there is a big contributing factor to a person hemorrhaging money in the markets. That your losses, not everyone, but the vast majority of your losses should be limited to 1 bar. You should largely not lose more than 1 bar. So your gains are many bars, but every loss is 1 bar. Sometimes your gains is 4 bars. Sometimes your gains are 4 bars, but your loss is 1 bar. Sometimes your gains are 8 bars, but your loss is 1 bar. Sometimes your gains are 3 bars, but your loss is 1 bar. Sometimes your gain is 1 bar, but your loss is 1 bar. Just that right there, I can instantly improve a trader's progress if I can get them to be a 1 bar loss trader. The second thing is not trading in the direction of the 20-period moving average. That would be the second thing. And then the third thing is not making your entries near that 20-period moving average. So those are the three things. The three things that contribute to a trader's failure. The three biggest things that contribute to a trader's failure is not limiting the majority of their losses to 1 bar, not trading with the 20. So if the 20 is rising, you're a buyer. If the 20 is declining, you're a seller. And not making sure that most of your entries are near or at the key 20-period moving average. So here's a rising 20-period moving average here. Boom, that's the blue line right there. And your entries should be at or near. Boom. At or near. Boom. At or near. Boom. All right. Now your 20-period moving average is declining. Now your 20 is declining, right? So you're playing in the direction of the down. You're playing downward, right? So you're going to play with the direction of the 20 downward, but you're going to make sure your entries are near that downward 20. So your entries have to come at or near. At or near. At or near. So I'm going to enter at or near the 20 right there, but I'm not going to lose more than that 1 bar. Look at how small your risk is. And then look at the risk as opposed to the gain. Look at that. Let's look at it again. Look at it carefully. Look at the risk. I'm going to enter here. Boom. I'm not going to lose more than this 1 bar right there. There's my 1 bar risk. Now look at the win versus the risk. That's your proverbial snowman. If you become a snowman trader, you're in this business forever and you're going to do extraordinarily well. Here's another entry. I'm not going to lose more than this 1 bar here. There's my 1 bar risk. I'm trading in the direction of the 20, but look at the win compared to the risk. That's a snowman. That's another snowman. Here's my second entry. I'm not going to risk more than here, this bar. And there's my snowman right there. These three things, don't lose more than 1 bar, trade in the direction of the 20, enter at or near that 20-period moving average on a color change. I can take those three things and I can radically change a trader's losing trajectory. Three things. Those are the most important things regarding the 20-period moving average.